The NYSE FANG Plus index is trading around 9% from its highs in June, giving back around a third of its year-to-date gains. So are we past the peak for big tech? Joining me now to discuss is Wang. He's a principal analyst and founder at Constellation Research. Ray, thank you so much for joining us from Orange County in California. Now, there's been a lot of discussion about whether we could be coming to the end of the bull run in equities, but you've got a bit of an anti-consensus view that the tech sector is actually a defensible one. So does that mean that at this point in the cycle we should be getting into tech?
I think so, and I think all the confusion about regulation, all the conversations about data privacy, it's a great time to jump in because it's very hard for companies to get to this level of scale. When you're talking about hundreds of millions of daily active users, when you're talking about companies that are going from social networks to commerce, to payments, to media, there's a lot of opportunities here, and I think jumping out would be a unwise decision, and jumping in now is probably one of the things that you could probably do very well if you're betting on the long run. Now, if you're betting on the short term or the midterm, that's a little bit harder to say.
So you mentioned regulation there, and it seems as though it's quite clear that there is a shortage of regulation, so tighter rules look pretty likely. Do you see that not as a threat to the sector?
There is some concern around the regulation, but I think moving forward, we're going to see business models shift as we look at how inherent personal data. So think about the data that you have from your conversations on these social networks. Think about your DNA. Think about all your personal data that's actually being traded and sold for free. We think that over time, we will get property rights for these types of laws. Just like we had land titles that became property rights, we had ideas that became patents that were intellectual property. Your inherent personal data will also become your personal property, and then we'll actually have a way where these social networks can actually trade on that data.
Now let's talk about a couple of individual names within the sector. One of the companies that's been getting a lot of media attention recently, of course, is Tesla. We've seen some wild gyrations in the share price since Musk's take private tweet, and the latest is that it's facing an investigation, a criminal one at that, from the Department of Justice. So I'm wondering what your view is on Tesla and whether you have confidence in Musk's leadership.
Well, I do actually, and I think the real question is we've seen a 52-week high of about $387, and we're down to about 300. But the numbers that we're getting from dealers and we're getting from the stores for Q3 sales are going to look pretty good. I think there's going to be some really strong Model 3 sales numbers people will see, and also some very strong Model X and Model X numbers. And so when we do the on-the-ground type of analysis, it's looking like they'll have good numbers. Now, is that going to translate to confidence in Elon? If people actually see that the numbers are up and that these are significantly larger numbers, I think that we'll see some gains back from Tesla.
Now, another stock I wanted to ask you about is Netflix. This has been a true disruptor story. It's had very strong fundamentals and very strong growth. Do you think that will continue, or do you see competition chipping away at its market share?
You know, Netflix has done a great job. We see most of that rise that's been going on in 2017 to about this point, and at about a 423 high, we're still a little bit far from that high. And so we're seeing that, we still see that there's getting subscriber growth. Their cost of content is the concern that most people have as they wrap up in the content wars. But I think in the long run, Netflix has other avenues of growth other than just the streaming of those shows. And I think they're also showing that they've been gaining in other markets.
So clearly you are very optimistic on the sector overall. Are there any stocks that keep you awake at night?
There are a few stocks that make you wonder how long they'll continue to grow at this rate, but they tend to be more, related to the social media scandals over time. But like Facebook, for example, is a great example of shares over time. The question is, will they be able to pivot fast enough into other areas? Their competitors in China, for example, have been able to get into payments more quickly, enterprises more quickly, media and entertainment. Facebook has been core to its social network, serving as that network, an ad network, and playing the ad game much more than the other areas where you see expansion in the Baidus, the Tencents, and the Alibabas.
So you mentioned the bats there. If we do see pressure on the US tech sector, how do you see that translating into the Asian tech giants? Do you see it as a kind of a substitution effect? It's going to be a positive one for the bats, or are they going to get dragged lower by Silicon Valley?
I think you have to look at those markets as different markets. The bats are in a closed market. They're in the Chinese internet wall. They're protected by the government. They're also attacked by the government, but they're in a protective market. And their ability to enter other markets is going to be dependent on how open their markets are going to be. The and let's say the Western social networks and Western tech stocks are probably operating on a different model where they have to compete, and they're competing in a much more free market sense. And in that free market sense, that regulation or the amount of regulation and their ability to respond to that larger set of regulations will dictate how well they do in the long run.
So what are your real top stock picks in the sector overall?
We still think that, Amazon's got a big run to get ahead of it. We still think Netflix is doing wonderful. We love NVIDIA, which is another great tech stock out there. And then in the enterprise side, we'd say that there are a couple ones people should watch. I think Salesforce, their conference is coming up. They're going to be doing, there are going to be some very interesting announcements there. Microsoft has their conference coming up in the next few weeks as well. And Ultimate Software is one people should look at, which is actually taking a lot of market share in the payroll and HCM, human capital management space.
And lastly, I just wanted to ask you about tech IPOs. Obviously, we've seen some very big ones this year. There's been Sonos, Xiaomi, Dropbox, Spotify, a whole host of tech IPOs. As we head into Q4 and look towards next year, do you expect this level of flotations to continue, or will 2018 mark the peak?
I think we still have more to come. I think a lot of people have been trying to figure out if they should time the IPOs before the midterm elections in the U.S. That's one strategy we see people look at. But I think there's still other anticipated IPOs that will come over time that I think you'll see as the market keeps up. So Spotify was definitely a great one. Pluralsight is one that people are looking at. Of course, you're going to see other big ones that come up as to whether we see, where Uber ends up in the long run as well.
All right, Ray, thank you so much for your time. That was Ray Wang, Principal Analyst and Founder at Constellation Research, joining us down the line from Orange County in California. I'm Victoria Scholar. Thank you so much for watching IGTV, and we'll see you very soon.
Subscribe to IG for educational content, company insight, financial analysis, and expert commentary.